Thank you, John, for the introduction. Thank you for CNS for hosting us today and for inviting us out. Thank you for everyone else for being here in person, for those people on Teams that are online. Hi. And also for the folks here at the Eden for their hospitality. Again, like John said, my name is Josh Hoover. I work with Walz Group. We'll talk more about myself and them in a minute. And I'm here to talk to you today about everyone's favorite topic, taxes. Everyone loves taxes. It's one of my top 5 favorite topics. I don't know about you. And specifically, we're going to be talking about the fuel tax credit, which is a credit that you may or may not have heard of before. It's a credit that you may or may not have taken advantage of before, and what you could possibly be asking your advisor about in order to take advantage of this credit. There we go. So today we're going to talk about the background on the excise tax for fuels, because that's kind of where this credit starts. Then we'll discuss the fuel tax credit and the related activities which actually qualify for the credit, and then the record keeping information that you have to keep in order to claim this credit. Because of course, as with any tax deduction credit, there is record keeping requirements. So first, Walz Group, if you haven't heard of us, we're a 50-person accounting firm, public accounting firm. We're down on Lidditz Pike, right by the airport. We specialize in assurance and tax work, so we'll complete your tax returns, but we'll also provide auditing, accounting, and business consulting services as needed. So we're here to partner with you to make sure that, one, that A, you're in compliance, but we're also that you have a plan, that you know that what's going to happen, what's coming down the pike in terms of your tax liability, and how to either smooth them out or what to do to try to reduce them if possible. A little bit about me. I've been working with the firm for about 8 years. I'm a senior manager in the tax division. I've done tax returns for corporations, S corporations, partnerships, individuals, so I've done the whole gambit. It's great. For on income tax side, I've also looked a little bit on sales tax, dabble in that, and payroll here and there. But enough about me. First, the disclaimer, the information that we're presenting today is meant to be informational, educational purposes. This is not meant to be tax advice. Please discuss this information with your tax advisor. You should have someone that knows your business, your individual needs, your individual circumstances. Please talk to them about this. If you're looking for someone to be your tax advisor, we're here. So first, we'll start with the excise tax on fuels. So the government levies an excise tax on fuels, whether or not you knew this. Typically, you don't pay this directly unless you're coming up. There's another slide that'll say who does, but it is usually passed off to you as the ultimate consumer through when you buy and purchase fuel. The whole idea of it is the tax is meant to be put into this highway trust fund, which then funds different roads and transit projects that are funded by the federal government. So section 4041 of the code is what actually levies the tax, and there's different types of fuels that it levies on it. So you have diesel, kerosene, alternative fuels, compressed natural gases, and also aviation fuels. So there's a second code section, 4081, that imposes the tax on activities with the fuels. You gotta love our government with the way that they organize these tax codes, man. Just put what it is and what it does in the same place, but they don't do that. So these types of activities are what subjects you to the excise tax. So if you remove fuel from a refinery, anytime fuel enters the United States, and then if it's sold to someone who is not registered under section 4101, which is generally everybody. So essentially, if fuel's sold to you, it is subject to this excise tax. Now granted, again, you're not directly paying the tax, you're not the one that's necessarily filing the form to pay this tax, but it's being passed off to you. So as the ultimate consumer then, you are allowed to claim this fuel tax credit for non-taxable use. So the taxable usage is essentially when you drive your vehicle. If the fuel is used to propel, to move your vehicle, that's the whole idea of this, is that we want to fund our roads, we want to fund projects to improve our roads. That's the purpose of the excise tax. But we don't always use fuel to propel vehicles. We can use it in equipment, we can use it in generators, we can use it in other aspects of our business. The idea then of the credit is to give you a break on that excise tax that you paid because it's not being used to move a vehicle. even if you have, even if you don't have an excise tax liability, you can still qualify to get this credit. So it can be taken against your income taxes, is what that's essentially saying. If you're not aware of the difference between a credit and a deduction, deductions are great because they lower your income tax. Credits are even better because they offset your tax dollar for dollar. So if you've never taken this before, if you're like, oh, I'm not sure, this may be something you want to talk to your tax advisor about. So what types of fuels qualify for the credit? You got gasoline, undyed diesel, undyed kerosene. I don't know if anyone's using aviation gasoline, but it is. Alternative fuels, there's a long list of fuels that qualify for this fuel tax credit. Again, if you're using any of these, whether or not you are, it is something that you can take advantage of. One thing that I didn't mention, that this has to be used in business. So if you notice, I do have a typo on the thing, which I'm going to fix before we send it back out to you guys. That's just a non-taxable use, not non-business use. So the fuel tax credit is not allowed to be claimed on fuels that you use for personal reasons. So like if you fill up your lawnmower and use your lawnmower to mow your grass, unfortunately you can't, include that gasoline in your fuel tax credit claims. Sorry, that's personal use. So publication 510, that's the IRS publication that talks about and discusses the excise tax and the fuel tax. There's a table in that publication which gives you the non-taxable, not non-business, non-taxable uses that qualify for the fuel tax credit. So today we're going to be focusing more so on number 2, the off-highway business use, which is probably where you're going to be seeing most of your, where you're going to be claiming your fuel tax credits. But there are other types of non-taxable uses here as well, and it goes on to a whole nother set there. But again, probably not. These are very specific, so they're probably not going to be used in most situations. So, what is off-highway business use means? So again, if the fuel is being used in a vehicle that is propelling the vehicle, moving the vehicle down the road, then that fuel is not allowed to be taken. You can't take a credit for that. So it's fuel that's used in a trade or business other than fuel that's used in a highway registered or registered use vehicle that's used on public highways. So it's included fuel used in the following ways: if you have stationary machinery or generators or anything like that, cleaning purposes, forklifts, trucks, bulldozers, earth movers, etc. That type of fuel qualifies, that type of use qualifies for this credit. So again, it does not include non-business use. So if you have a snowmobile or again a lawnmower that you use personally, again, unfortunately, that does not qualify for the credit. So then the publication continues to define a highway vehicle. I think that's fairly self-explanatory, but they do have to go into that. So a highway vehicle, any self-propelled vehicle designed to carry a load over highways. Doesn't matter what that is, if it could be people, it could be cargo, it could be anything, as long as it's able to carry a load of cargo down the highway, then it's a highway vehicle. There are 3 types of vehicles that are not considered highway vehicles that we're going to quickly go through. Specially designed machinery, vehicles that are designed for off-highway non-transportation, and non-transportation trailers. So there are 4 requirements in order to be considered a specially designed machinery. I'm not going to read all of this to you, but essentially that it's machinery that's just sitting on the ground, powered by fuel, that's doing something other than moving a vehicle, is that would fall into that definition. You also have vehicles that may be designed for off-highway use. Think tractors, think things that are used in farming. That would be typically of this in this type of category. And then you have non-transportation trailers and semi-trailers that are not used for transportation and transporting cargo. If you have an office sitting in a trailer for some reason, then if you're powering it with a generator, that fuel would be qualified for the fuel tax credit. Other quick definitions: public highways. Any road in the United States that is not a private roadway is considered a public highway, so don't think that, okay, I don't drive my vehicle across Route 30, that doesn't mean that. That means that it's not a public highway, that's fine. No, it's, even if you drive it up 501 or whatever, it's still considered a public highway for definition of the fuel tax credit. Vehicle has to be registered, so in terms of that, it has to be registered with the state, a foreign country, or the District of Columbia. So those vehicles, again, use of those vehicles to propel them, those don't qualify for the credit. And then the usage. So it depends whether or not how you use the fuel, again, matters in terms of claiming the credit. So if you have a dual use of the propulsion motor, unfortunately you're kind of out of luck with this one. So it doesn't include any fuel that's used in the propulsion motor of a highway vehicle, even if that motor does something else to power some other non-taxable equipment. So for example, again, a motor that's in a concrete mixer that powers both the motor of the vehicle and the mixer, the fuel does not qualify because they can't tell the difference. They can't say this is the stuff that's used for moving the vehicle and this is the fuel that's used for moving the mixer part. That does not qualify. However, if you have a separate motor, then you might be more in luck. So if it's used to operate a special equipment within a vehicle, such as a refrigerator unit, a pump, a generator, some kind of mixing unit, and you have a separate motor for that, now you can quantify the difference and the fuel used for each motor. So you do have to make a reasonable estimate of, which is always great because they never define what that means, based on for your operation and supported by your records. So you have to use some kind of a device. You have to have some way to measure how far your vehicle is traveling in order to then calculate the number of gallons used to propel the vehicle. You also do have to add a little bit of fuel in for the amount of time that the vehicle is idling or warming up, so they don't let you get away with that. But then the difference between those two would be the fuel that's used in the separate motor, and that's what would be eligible for the credit. So for example, in this wonderful example that they put in the publication, Hazel has a refrigerated truck. It has a separate motor for the refrigerator unit. The truck, the same tank supplies both motors. So if she uses the hubometer, then Hazel finds that 90% of the fuel is used to propel the truck. She calculates that based off of how many miles she went and the truck's the fuel usage miles per gallon. And then therefore then the other 10% that was used to fuel the refrigeration unit is then qualified as off-highway business use. So that's where you may be finding this credit, is in these other little ways that you're using your fuel besides to move your vehicles. Unfortunately, too, you cannot claim fuel that has been lost or destroyed. So once it's gone, it's not eligible for the credit. So just be careful about that. The rates themselves for off-highway use, if you're using gasoline, you get 18.3 cents per credit. Per gallon, sorry. Same thing with the undyed diesel fuel. It's just that non-taxable use down there. It's the 24.3 cents per gallon. The rates change depending upon its usage. It follows the excise tax. So it's meant to help offset the excise tax on the use of these fuels. Same thing with the undyed kerosene and the alternative fuels. That's usually, again, 24.3 cents per gallon, and the alternative fuels 18.3 cents per gallon. These haven't changed at all, really, for years and years and years. It's been this way in terms of the amounts. But if you use a lot of fuel, there's potential you could be getting a tax credit for this. So what do you do in order to actually file the claims to claim this thing, to get the credit? There's some record-keeping requirements that you have to be in mind. What forms are we going to file? And then we'll go through a couple examples of those. So record-keeping, this is very important in terms of substantiation, in case the IRS were to ever come to you and say, hey, you took a fuel tax credit. Please tell us how you got to that. How did you figure that out? So you have to know the number of gallons purchased and used during the period that covers your claim. You have to know the dates of your purchase. You have to know the names and address of your supplier and the amounts purchased from each period in the claim. That's essentially a receipt, right? You get that when you buy your gas. So if you keep the receipts for the fuel, you got 1, 2, and 3. Done. Those are checked off. Now, you also have to know the non-taxable use. So that's something that you need to keep separate records for to say, okay, this is where we used this fuel, this is how we calculated the non-taxable use amount, and the number of gallons used for each non-taxable use. New for 2024, if you've claimed this credit before, there are records now that need to be provided related to Form 4136, which we'll get to, which is the annual fuel tax credit form. That's going to be on the next slide. So the Form 4136, they added this wonderful supplementary schedule, which now has to be included with your claims starting in 2024. If you want to see this is in the instructions for the 4136. If you go out to irs.gov and you type in Form 4136, it'll pop up the instructions and it'll show you the statement will be at the very end of that. So kind of zooming in on those, this top section just is saying, hey, make sure you fill this out. If you don't fill this out, they can slow down your credit claims. So this is very important to make sure that this information is provided to your tax preparer so that way you can get the credit and you can get it timely. So the first section, they'll ask for your business name, they'll ask for your ID number, and then if you use fuel for a non-taxable or off-highway business use, you have to provide the make, the model, the year, and the type of equipment, a description for all equipment that was being used. They want more information. As we've been seeing and progressing in years and years, the IRS is requesting more and more and more information to file these returns and to claim certain credits. So that is new for this year. You'll have to provide make, model, year, and type of equipment. Then, this is kind of things that you may already have in your record, so this isn't too bad. You have to provide the number of gallons that you reported on the form for the credit, multiply that by their estimated national average cost per gallon. Sure. And then put in your actual fuel records from the actual cost from your records. So again, which that should already be in your records, so it shouldn't be too hard to come by that information. It's really... No, I want to go back. One more. It's really the make, model, year stuff. That's the new stuff. Maybe if you keep a fixed asset sheet or something to that effect where you have your depreciation records, they might have that there, but not all of that's always complete, so just be aware of that. All right, so where do we claim this? There's 3 spots where you can claim. If you file an excise tax form, if you file for the fuel tax, excise tax, you can claim it directly on your Form 720, which is a quarterly form that you file right on Schedule C. If you don't file an excise tax return, you can claim it on Form 8849. If you want to get them as a refund right away, that's a quarterly form. So you can get this as long as you meet the requirements. You can get this like in June for first quarter if you want it early. But if you can't use either of those 2 forms, you can always use Form 4136, which is the annual report, which has that fun little extra statement. So 8849, again, it's a quarterly form. So this is something that this is a way to get the credit faster. That's the whole kind of point of this. So you can file on this on a quarterly basis. So it goes, January to March, etc. Those are due at the end of the next quarter. So first quarters for 2025 isn't due until June. However, though, to use this form to claim the credit, you have to have at least $750 of credit coming back to you. That's the catch. So that's just one thing. So if you have less than that, unfortunately, you can't claim it early. If you can't get it early, though, you can always get it on next year's income tax return with the 4136. So again, this is going to take the credit against your income taxes. This is an annual filing that you would do. Just make sure, one key point, do not report any fuel tax or any fuel that you already reported on Form 8849. You can't double dip. So make sure that this is, if you do both, that you are excluding the stuff that you've already received your credit. For individuals, then you'll claim this on your individual return. Partnerships pass the information through, and then corporations claim this as a credit as well. One thing I'll say, if you're a partner in a partnership, you want to make sure that you get that, and you're getting a 4136, you want to make sure you get that supplementary statement. That goes with your tax return. The partnership doesn't file the 4136. It's just attached to your K-1, goes to you. You're responsible for disclosing that information. And again, you don't want to cause your refund to be later than it usually may be. So we'll go over two quick examples here. So first example, we have a calendar year C corporation that has these fuel tax expenses and these fuel tax credit claims. So what they can do is they will take the expense as an expense on their income tax return. You still get that deduction. However, then in the first 2 quarters, you'll notice the fuel tax credit claim is above $750. So they can claim that credit early. They can claim the first credit in June when they file. They can claim the next one in September. The other 2 are less than $750, so they have to wait till the end of the year, and they'll claim it on that form, and then they'll still altogether get $3,082 back. So you still get your full credit. It's just what time and in terms of its timing. You do also, I think it was back there on the other slide, you do also have to include the credit in your income. So it is income to you because it's offsetting offsetting a tax, so it is included in your gross income. And if you're worried, like, okay, wait, that doesn't make any sense. Why am I including this in my income and then getting a credit? I don't think I'm going to be getting, there's no, isn't it just an in and out? Well, you're paying tax on the credit. So if the only thing you got back was your credit and that was your gross income, if you're a C Corp, your tax rate would be 21%. So the fuel tax credit you're getting, the $3,082, is greater than the tax you're paying on the actual credit itself. So you just have to, if you're an individual, you have to substitute your individual rate in there and you get to the same thing. So, but it's a benefit. If you can claim this credit, this is a good thing to try to claim on your return. So example number 2, we have a sole proprietor. Again, so we have 2 fuel credits there that do not exceed the 750. However, you can combine your 2 periods together, and you can get the credit early if you still want it by filing the 8849 in September in this case. Again, though, they would report the 1276 as income, but if they don't want to use the 8849, they can always claim it on the 4136. So that's all I had. So wow, timer's at 0. So if you want more information about the go back. If you want more information about the fuel tax credit, or if you need a sleep aid, you can always look at IRS publication 510, which is on the excise taxes, chapters 1 and 2, the 4136 instructions, and the other form instructions, which you can find through irs.gov. You can also always contact us if you're curious, if you have any questions as well. We have our website up here, walzgroupcpa.com. You can also contact us by phone or by email, or you can talk with Dan or Robin at the break or at the end. So thank you again, everyone, for your time and your attention. I hope you enjoy the rest of your time here today, and thank you for having us here to speak.